Good afternoon. Thanks for tuning in. You're watching Countdown on BloombergQuint Live, India's first digital live streaming business news service. I'm Navneet Saluja D'Souza. Well, these are the top headlines that we're tracking at this hour. Markets give up gains to trade flat. The Nifty is trading around the 11,900 mark. Banking stocks underperform, with the PSU Bank Index being the top sectoral loser. Yes Bank extends losses to trade at a 2.5-month low after a delay in its capital raising plans. Adani Transmission too gives up gains to trade flat, and the company has signed a definitive agreement for selling 25% stake in its Mumbai power unit to a Qatar fund. And Saudi Aramco has listed at a 10% premium to its listing price at the Riyadh Stock Exchange. Shares listed at 35.2 riyals against an issue price of 32 riyals. Good afternoon, Neeraj. I think that will be the headline worldwide today, listing of Aramco, which has become the biggest IPO and the biggest listed company now in the world.
$1.88 trillion. That is quite something for a company to have. It dwarfs the others by a margin, really. But, well, we'll get to that. We'll talk about that as well with our Bloomberg correspondents in the Middle East. Quickly, first, our markets, 0.16%. So it's been rather quiet in the session today. Even for the broader end of the spectrum, nothing too dramatic. And I want to quickly get the heat map up on the screen to show you just how the trade on the index has been. Again, like yesterday, the reds eventually claw back, and it's even Stevens right now. Just that the greens are holding on. So GAIL, after a correction of 4% yesterday, rises about 5%. Z Entertainment correcting 4% yesterday, up about 2%. Bajaj Finserv up, Kotak Mahindra Bank up. There is strength in TCS and Bajaj Finance as well. So a mix of companies which are doing well, and some of the beaten down names like the IT names are doing well. What is not doing well? The likes of Yes Bank, which is down about 16%. Hero, Vedanta, Hindalco are amongst the other names, the commodity names, which have corrected a bit in trade. Very quickly, before I hand it over to Navneet for what's happening across the liquid universe, quick check on what the broader end of the spectrum is doing, and should get the MRR function up for either the mid cap or the small cap space. Yep, this is the mid cap space, and Manappuram Finance, IPCA, PI are amongst the names. Aditya Birla Capital bounce back, as does HDFC AMC, by the way, and Tata Power has some gains. What is not doing well? Oberoi, yet another day of a correction for this one. But Sterlite Tech is down about 10% after the commentary came out on one of the media houses, and that one has corrected quite swiftly in trade today. But it also remains to be seen what happens at the more liquid end of the universe and what's happening at the entire F&O space. And Navneet, a quick perspective here, what's happening?
Well, Neeraj, it's a range-bound session. We've clearly seen support at 11,850 mark, which we had breached, but resistance is coming around the 11,900 mark. We did surpass that level during the day, but there was some selling pressure which came back. So the premium on Nifty futures currently at 42 points, open interest build-up of 4%. Bank Nifty, which did witness fresh shorting in yesterday's trade, there too as well we are seeing some bit of build-up. The Bank Nifty is not doing anything right now. Pull up the volatility index. After cooling off yesterday, we are seeing further cool off of about 4%. 13.7 is a very good level, at least for the bulls. But looking at the options data, it's giving you a hint that the markets will continue to be range bound, because there is a lot of call writing which is coming at 11,900 strike. Almost 12 lakh shares have been added there, while on the put side you are seeing OI addition for the same 11,900 and the 11,800 put strike. So the range in the near term will remain as 11,800 to about 11,900. In terms of individual stocks, Bata is doing well today. In fact, there is both price as well as open interest action telling you fresh long positions are seen here, and the stock has also crossed its 50-day moving average, 11% higher when it comes to OI build-up. Cummins has touched 52-week low. The stock's fallen in very high volumes in the cash side. Also, if you look at the counter, it has been an underperformer so far this year. It has tumbled about 40%. You can see on your screen the volumes are being projected on the white line vis-a-vis the average volume of last 20 sessions. And very quickly then, Yes Bank, the stock of the day, likely to enter back into the F&O band for tomorrow's session, because the last data that I checked was open interest as a percentage of MWPL is currently at 97%. Just a caveat, the trends do change in the last hour of trade as well, but as of now it looks like it could just head back into the F&O band. Aggressive call writing and fresh shorting seen in today's trade, 17% lower. That's the day's low, by the way, and you are seeing OI build up on the future side of as much as 22 to 23%. And since the morning session, Neeraj, the futures have been trading at a discount.
Yeah, they have been. And, you know, the other bit is that while we're looking at the more liquid universe, which is the FNO space, you've got to look at what's happening at the broader end of the spectrum to select names. One of them is Sterlite Tech, which is down 10%. The other one, and which will be in focus, would be Ujjivan because of the listing tomorrow. And if indeed the SFB listing isn't the most spectacular, you might see some corrections out here as well. We'll talk about this extensively a bit later on in the show, as well as on First Word tomorrow. But first, let's take a look at what's happening at the global end of the spectrum. Remember, the Fed meet, and very important, the commentary that might come in from the Fed as well. Let's get in Nick Parsons of Thomas Lloyd Group joins us right now on the show. Nick, good having you. Thanks so much for joining in. We might want to comment on the new kid on the block, Aramco, as well. But first, let's start off with the big news, and that is the Fed meet. What do you anticipate, either in terms of action, if anything at all, or in terms of commentary?
Well, I think calling the action is the easy thing to do. The Fed will leave rates unchanged this evening. The Fed's come off a very, very difficult 12 months. 1 year ago, you'll remember, they were signalling that there were going to be 3 rate hikes this year, instead of which they've cut 3 times. They've given in to pressure from the president, they've addressed the concerns of financial markets, and they're in a position which 12 months ago they simply did not expect to be. So it's been a very, very bruising 12 months. So I think coming off that, they will be very, very happy not to have their hand forced again this time around. And I think their job really is to try to maintain the confidence both of the general public, of consumers and manufacturers and industrialists, as well as financial markets. And the best way they can do that is a commentary which suggests that there needs to be no change in rates over the next 12 months. Now, of course, saying that doesn't mean they don't expect a change, doesn't mean there won't be one. If we look at what futures markets are pricing, they're suggesting there's a 62% probability of a cut over the next 12 months. But I think the Fed's job tonight is to reassure businesses, is to reassure consumers, and perhaps most importantly, given the very sharp sell-off that we saw in the end of December last year, it is also to reassure financial markets. So if we saw the Dow Jones, the S&P, the dollar and bond yields close the session in the US this evening, roughly where they are today, the Fed will consider that a job well done.
Okay. The other bit is, how do you think markets react to the commentary from the Fed? I think almost everything seems to be pointing towards a market which is waiting for some bit of activity either on the trade front or from the Fed. Anything that do you think could move the market needle a bit?
I'd be very surprised, because the Fed doesn't really want to move markets from here. It would see the S&P at 3,100, the dollar index pretty much within 2% of where it started the year, and US long bond yields around 170, 175, as being consistent with its mandate and as being consistent with financial stability. So I don't think the Fed really wants to give too much of a lead. I think what it will do in the forecasts, because as well as the actions that we get tonight, we get a new set of Fed projections and we get a new set of dot plots. What it will do is the same that it's done for the last 7 or 8 years, which is to say, yes, inflation has overshot, but stick with us. We're fairly confident that on a 2-year horizon, it will be back up to target. GDP will be at or around 2%, PCE will be at or around 2%, and really nothing to see here. I think if the markets were to move after the Fed, then they might well consider that wasn't the very best worded statement that they could have put out. So I think really there's no clues for the market from the statement, but the Fed indeed would be very happy with that outturn.
Nick, just a follow-up, while everybody's looking at the Fed for now, I think the next few days would also be interesting from what comes out of the tariff deal, if not the trade deal. And today, or overnight, Bloomberg.com reported that China now anticipates that there might be a pushback on the deadline from Donald Trump himself. Now, One, how likely is that? And if that happens, do the markets get disappointed or excited in either direction? What is your estimate?
Well, I think trying to predict the president's next moves is a fool's game. He's, to be polite, he's capricious. He's not always consistent in what his statements say from one week to the next. But equally, it's very, very clear that the president and his team are very adept and very clever at supporting the market. We've not seen any single day sell-off greater than 2% for the best part of a year. And it's very clear that when markets do dip, we get what's essentially a White House driven plunge protection team comes very quickly onto the news wires, whether we see Mr. Mnuchin or whether we see the economic advisor, Mr. Kudlow. It doesn't take very much of a fall in the Dow or the S&P to get them scurrying around their the TV studios. The best and most recent example of that, if you recall, was only Tuesday morning of last week. We had a fall of around 1.5% in the Dow and the S&P. There was some consternation about an imposition or an acceleration of the tariffs. And by Tuesday morning, right on cue, there they were doing the studios of the financial TV, yourselves and others, and the market duly rallied. So they're very, very mindful of day-to-day movements in financial markets. And so I think that's what's helping keep the sell-offs pretty much in check. Now, I've been surprised, if anything, at the gullibility of financial markets, that as soon as we get a set of headlines saying trade talks are on track, or there's going to be some agreement or only a very small postponement, then the Dow and the S&P duly rally and off we go again. So I think they've got a very, very adept media team, and the plunge protection squad, which we always used to be thought was based in the Fed, seems in fact to be based in the White House these days.
Okay, well, the other piece is, of course, the big kid on the block. I would refrain from calling it the new kid on the block. Saudi Aramco is listed at a 10% premium to its issue price on the Saudi Arabian stock markets. Let's get in Yusuf Gamal of Bloomberg News, who's joining us now from Riyadh. Yusuf, good talking to you. Thanks for speaking to us. Tell us a bit about this. It is surpassed estimates. What is it that locals are saying about what happens next? I read a lot of articles which spoke about how this adds to the depth of the Saudi market as well.
It does. I mean, it is a massive company, and even though a small percentage of total market cap is being put out there for investors, 1.5%, which is just a fraction if you compare it to any other heavyweight company that's listed around the world, it still adds a lot of liquidity to the main Saudi stock exchange. And once everything is formalized, it will make it the 9th largest stock exchange in the world, just a little bit more than India in terms of total market cap. But you mentioned the big spike we had, 10% up limit. That brings the valuation to $1.88 trillion. We started off with a base valuation of about $1.7 trillion. This is absolutely crucial in terms of the optics. You remember that a lot of the discussions that we've had with our experts is that the true $1 trillion valuation was out of reach. And so now we're getting closer to it. It is still early days. We have until the end of the day, 3 p.m. local time. And then you go into the second day, of course, later on in the week. And what's going to be absolutely fundamental to this is the government efforts to try and make sure that that trajectory very much remains in place, with incentives, with government funds playing a role. And of course, the sheer size and scope of Saudi Aramco means that you could get a fast track to inclusion in some of the global indexes.
Nick Parsons is with us, Yusuf. And Nick, can I quickly ask you just heard Yusuf speak about what this does to the depth of the market, but also the surprise uptick that we've had. Do we have a new contender for the race to the $2 trillion mark?
Well, I think it's very interesting to see the way in which Saudi has now been propelled up the league table of international stock markets. It's now got a top 10 position. It ought to be able to, at the very least, consolidate that and I think it is generally a good for the broader Gulf region. It's not just a Saudi success. I think it will be seen as a GCC success, the Gulf Cooperation Council, and I think as long as we hold at least until we've all forgotten about it, until it no longer makes the front pages, and that probably takes a week to 10 days. But if in that week to 10 days we're able to hold above the issue price, then whether or not we get to $2 trillion really doesn't matter. As long as the float, in terms of its early impression on investors' minds and memories, as long as that float is deemed to be a success, as long as it settles at somewhere above its initial price, then I think everybody will be happy. We still seem to be some way off a $2 trillion valuation. Obviously the stock was priced to go, and as your correspondent said there, with only a small amount of the actual stock in free float, it's always open to some degree of manipulation by the issuers and the sponsors. But as long as we can hold just at or around close within touching distance of 2 trillion as a valuation, then I think everybody would deem this as a success. But of course it's not the 2 to 2.5 range that we saw talked about 12-18 months ago. They have had to settle for something less than that, but I think everybody associated with this float would deem this a job well done if it were to settle at or around current pricing.
Well, absolutely, Nick. It's a job well done, and the listing has been better than what the street was expecting, because during the time of IPO, there were murmurs that the response was not that great. But Yusuf, before we thank you, just a question there. Today, there was a limit of about 10%, so it's hit that limit. This continues tomorrow as well?
Yeah, so tomorrow's a fresh day. So basically, the 10% limit still applies, and it applies to all stocks on the Saudi Stock Exchange. So it has the possibility to rally another 10%, but for the day that is the Wednesday, that is the maximum that it can achieve. So the $2 trillion mark is going to come into striking range during trade tomorrow. It'll be interesting to see whether that really continues. But one thing is for sure, that this really arguably sets the stage for further reforms from the government. We were talking to some key Saudi government sources, and what Bloomberg understands is that the Crown Prince is actually unhappy with the pace and the cost of some of the reforms. So the momentum to change and to tweak is very much intact, guys.
All right. Yusuf, thanks so much for joining in. Nick Parsons, thanks so much for joining in the overall perspective as well. Appreciate your time, gentlemen.
You can't call this one a kid.
No, new kid on the block. No, not at all. This one, as Yusuf tongue-in-cheek mentioned, that just slightly short of what the overall market cap for some countries is, but very interesting listing. Okay, I think it's also important to take stock of, while what's happening to the world is one thing, what's happening to the Indian markets, which are trading absolutely flat, and we should try and get a local perspective as well. What Aramco has done, what the Fed will do is one thing. What our markets are doing right now is consolidating at these lower levels, and maybe, just maybe, the near term would be dependent on a number of factors, including, of course, what happens to the globe, but also if there is something coming with GST, if there is some more news flow that might keep the markets excited, because frankly, aside of that, we are devoid of news. We're done with the policy, we're done with earnings, and anything else comes up only in the month of January.
Yeah, I think tomorrow we're getting the IIP numbers and the CPI
data.
So that will be the key macro indicators, at least for tomorrow, to monitor.
Yeah, it'll be interesting to see what happens to yields as well, because they've hardened quite considerably. Well, let's talk about all of that with Sachin Shah of MK Investment. He joins us right now with a quick perspective. Sachin, good having you. Thanks much for joining in. A bit of a lull in the markets, really, with a bit of a downward bias. What is it that you are doing within your portfolios? Would you be sitting tight on cash if you had it, or are you finding lucrative opportunities right now?
Well, you are right. Actually, this is a bit of a subdued environment at this point in time, because what we have seen is that things at the ground level are a bit slow, and from that perspective, actually, it is a bit challenging in terms of deploying new money. But yes, we have a decent amount of cash, and we would like to deploy, because as you know, that the valuations are becoming reasonable for a lot of sectors. So from that perspective, yes, we continue to invest.
Okay. I wonder, would you be a buyer into a lot of the names which have come off from the kind of highs that they enjoyed? Because a lot of the 9 out of the top 10 most expensive stocks in the month of October on the valuation basis have come off anywhere between 5% to 15%. Are you shopping there, or are you shopping in areas which were anyways cheap but are now starting to find their mojo?
Well, I think we'll be a little bit more focused on areas which are a little more cheap, because where we feel the valuation is much more comfortable. So say sectors like say pharmaceutical sectors, or say something in the even some bit on the auto ancillary side. So some of those sectors have actually come off quite a bit if you see the last 3 years, right? And if we believe that there is some catalyst in terms of the business outlook getting a little better over there, we would like to actually play over there.
Sachin, what about the telecom space, which has been in focus in the recent past, of course, for various reasons? But would you take a bet there as well? Because a few months back, if someone would have asked, Bharti Airtel now is the top performing Nifty stock of this year at least.
Sure. So telecom has been a good bounce. As you rightly said, that Bharti has been one of the better performers. We've also played telecom. We invested almost 6 to 8 months back in the space, not through Bharti, but some of the other players, the new players in the industry. And we believe that telecom is the story which will continue to do well for at least another 12 to 18 months.
You remain invested in the space, whichever stock you've bought. Okay. Moving away from telecom, Sachin, the other space, and I'm going to include the broader markets here, just when we hit the record high levels, at least for the benchmark indices, there were talks how broader markets can revive from here because they have been trading at a discount to Nifty now. But of late, in the recent past, once again, that selling pressure has intensified in that area. If markets were to scale higher from here, let's say, do you think the participation will come back from the mid-cap and the small cap space, or once again it will be a polarized move?
Well, it's very difficult to say, because at one end what we've seen is that the divergence between the mid cap and the small cap versus the few Nifty stocks has been extremely high. If you see on a 3-year basis, the divergence is as high as nearly 40% in the sense that the small cap index, I think in the last 2 years, is down more than 30% Nifty is up good 10%. So the divergence is as big as 40-50% in the last 2-3 years. So but at the same time we are not seeing too much of interest coming in from the domestic institutional investors side on the mid cap and the small cap segment because of their own challenges. So it's difficult to at this point in time figure out what is the catalyst that's going to be for this to capture this valuation gap and bridge this this big divergence over a period of next 6 months or so. But at this point in time, honestly, it's difficult to figure out what is that catalyst going to be.
Okay. While we speak, just want to address the markets. We are at day's low now. Nifty is in the red. 11,842 is where it's currently trading. Sachin, of course, the focus shifts to the upcoming budget then next year. And lot has been spoken about with regard to the fiscal situation because of the revenues not coming in via indirect taxes. That's GST. Let's see any sort of tinkering happens there or not. But divestment is the other thing from where government will try to get majority of its revenue now. Going by that theme, do you think PSU stocks can be a good play in 2020?
Well, just because of divestment, I'm not very sure at this point in time. Yeah, but once the divestment happens and once the new owners take over those companies, and then what is the plan of those new owners in terms of growing those businesses to the different level and in terms of the profitability? I think, yes, that will be a very, very interesting space to watch out from that perspective. So I think it's a big, big reform that this country has been waiting for a while, and probably it will happen this time. So yes, we are very closely watching that space.
Okay, we leave it on that note. Sachin, thanks a lot for joining us and taking us through your views on the markets. While the markets are witnessing intense selling pressure now, at least in the last half an hour or so. We have seen markets coming off 11,840, 17 points lower for Nifty, as you can see. Let's move on and address a space. We've been talking how steel companies, not just in India but globally also, we've seen some price increases coming by. So let's speak to a management of Kalyani Steel, which is a company that gets nearly 70% of its demand from the auto sector, with some green shoots now emerging from this space. And the correction, by the way, and also graphite electrode prices, what are the prospects for the company going ahead? Let's ask Mr. R.K. Goyal, who is the managing director of the company. Mr. Goyal, good afternoon, and thanks a lot for joining us. Since you get majority of your revenue from the auto space, nearly 70%, tell us what's the on-ground situation right now? Is the demand environment reviving for you?
Good afternoon. We are definitely finding much larger demand from the auto industry, particularly passenger vehicles and two-wheelers, as well as tractor segment. So this is definitely a much better sign, and we expect our capacity utilization to go up in near future.
Is your current capacity utilization level?
It's around 70-75%, and the way the market looks, very soon we should be again able to touch 100%.
Okay, before I move on and talk about the raw material prices for you, has there been any revision, sir, in the prices recently?
You see, while we had to pass on a massive price reduction to our customers, definitely there is some correction in price of coke and some ferroalloys.
Okay. What about the graphite prices? If you could just give an indication this month how they have panned out vis-a-vis last month.
You see, graphite electrode prices are in line with what it used to be around 2 years back. In between, it had gone up almost by 7-8 times, and that correction has happened.
Okay, and do you expect the current prices to stay where they are, or they can further reduce in the coming months?
So I think it will be around this the current prices.
Okay, so then can we expect the margins, sir, to be better vis-a-vis the last quarter, since demand is reviving from the auto space, raw material prices for you is also cooling off?
You see, margins are still under pressure, or they will remain the same. But if we have better capacity utilization, which means better profitability.
Okay, and a word on iron ore situation for you. Where are you sourcing it from? Are you facing any difficulties?
So currently, since the demand is subdued, adequate quantity of iron ore is available in Karnataka, and 100% of iron ore sourced by us is through e-auctions.
Mr. Goyal, just 2 or 3 small clarifications. Good afternoon.
Yeah.
Firstly, we got this news that Blue Tokai has gone out and reduced or renegotiated the graphite electrode contracts at a lower pricing for the period of Jan to June. Do you foresee that, if not immediately, but by virtue of that, over the course of the next 6 months, the prices can go down?
I don't see some further major reduction.
Acha, you don't. So what are the current prices, sir, and what's the range that you anticipate for graphite electrodes?
You see, current prices are around 120,000 rupees per metric ton, and it may move a few percentage here and there only.
Okay, so that's as far as this goes. The other bit is we hear, and I don't know whether you get directly impacted or no, but maybe an industry view might be helpful, Mr. Goyal, and that is on this this document which came out, which suggested that new companies hitherto going ahead will not be able to make multiple bids for iron ore assets. They will have to make one bid per company. Even affiliates and the main company included will be able to make only one bid as opposed to multiple bids earlier. How does this affect the bidding process for iron ore mines, Mr. Goyal?
So what I understand, for one mine you can make only one bid. More than that I am not aware.
But I believe earlier companies through themselves and their affiliates were able to make multiple bids, right?
No, this, to my understanding, this was already plugged when they have started auctioning of C category mines in Karnataka at least.
Oh, okay. So you're saying that is not a change from the past. Okay. No. Fair call. One last question, Mr. Goyal, and that is on the inheritance of environment and clearance. I believe that also has been now kind of stop, wherein companies will have to apply afresh for environmental clearance for these mines as well. Have you heard anything to this effect, and how would it impact the space?
No, it is under debate. There are various news which are coming. One is for the new mines. The existing environment clearance may continue till it expires, but I'm not hearing anything concrete, but various views are being expressed through print media or otherwise.
One last question, at least from my end, Mr. Goel. With the kind of business sentiment that prevails right now, how do you see Kalyani Steel grow for the October, November, December quarter, arguably for the second half of the current financial?
As I've already said, we are seeing better signs from our customers. So hopefully the situation will improve further.
So one question, since you're a cash-rich company, correct me if I'm wrong, you're sitting with cash of about 300 crore. Would you look at any organic or inorganic expansion in the near future?
We are continuously evaluating such opportunities.
Is the 300 crore currently invested somewhere?
Yeah, more than that.
More than that. All right, Mr. Goel, we leave it on that note. Thanks a lot for joining us and taking us through what's happening with the industry and also with regard to raw material prices, already indicating that graphite electrode prices have come off in the last 7 to 8 months. And the company does feel that the demand environment from the auto space, where they get 70% of their demand, is reviving. And going ahead, capacity utilization levels for them can increase from 75% to 90%. But markets shifting focus back to the trading wheel. 11,830. Let's see where the closing comes about. 11,800 was the support that we've been talking about. On that note, let's bring in our next guest. Kshitij Gandhi of SMC Global Securities joins us on the show now. Hi, Kshitij. At current levels, what's the view? Would you take any fresh bet on the indices?
Yeah, very good afternoon to everybody. Rightly mentioned, like currently we are trading at the crucial supports. If I talk about Nifty particularly, the 11,800. It's not wrong to say that it can be a make or break for a Nifty at current levels, because 11,800 levels would be the very crucial support level for the Nifty moving forward. And from the beginning of this week, we have been continuously, however, seeing the short build up into the market as the 11,900 call strike and the 12,000 call strike is continuously adding the open interest build up. So I believe any sharp upside, I can't expect any sharp upside into the index. Yes, but particularly stock specific movement we can see further on. And if I talk about the Bank Nifty as well, currently Bank Nifty is also trading at its crucial support, which is placed around 31,000 levels, and after that 30,800 levels. These could be once again very crucial support for the Bank Nifty moving forward. And if I talk about the broader charts as well, currently the broader charts suggest me that the markets are still in bull run, but yes, on a short term basis we might witness some kind of a profit booking in near term as well.
Okay, in fact, that's the view coming in from a lot of technical analysts, that longer term charts still looking positive, but in the near term you could expect some bit of consolidation. Manav Chopra of India Bulls Ventures joins us to give his views as well on the markets. Hi Manav, good afternoon. What are your thoughts at current levels? Would you be a buyer on dips, or you would initiate any position on the downside?
The markets have been quite in a consolidation manner. It has witnessed a corrective decline from its recent highs, and it's nearing to its important support levels of 11,100 band. So I sense in the near-term perspective on the index front, we could see this consolidation phase to continue, and probably in case if there is a strong reversal around the support areas is when we could see some sectorial rallies coming all across. But till then, I sense as long as we are trading below the 12,000 resistance level, we could witness that corrective drift towards the support zone on the low side. Similar formations has been witnessed in the Bank Nifty too, and I sense Bank Nifty could retest the levels of 30,700, which is its important weekly support level. So for the near term, we expect a corrective decline in both the indices, and there could be a continuation of the profit booking, but nevertheless we would be looking at the weekly support levels for initiating our medium-term positional trades.
Okay, what about specific stocks? Mana, I'll start with you first.
Sure, my first buy call is on Divi's Laboratories. In fact, this stock has been in a very good uptrend, and from the pharma space, it has been in a very good outperforming stock. The prices did witness a breakout today on the intraday charts, but it is still trading above its short-term averages, and the volumes and the open interest do indicate that we could see some further upside into this, having important support around the levels of 1800. We recommend a buy into this with a stop loss of 1785 for an upside target of 1925. My second buy call will be on Manapurna Finance. In fact, the stock has witnessed a good breakout from its falling trend line drawn from its recent peak highs, and this breakout has accompanied by above average volumes, and we sense that the near-term bottom is in place, and eventually the prices would move higher and even exceed its recent swing high. Keeping that in place, it's a buy with a stop loss of 160 on the lower side for an upside target of 178.
What about you, Kshitij?
Yeah, as the markets have been feeling pressure at the higher level, but still I will be comfortable going long in some stocks. First stock is looking good onto the charts is Bata India. Currently stock is trading around 17-14 levels, and on the technical parameters, the stock is forming up inverted head and shoulder pattern on a daily chart, which is a bullish signal for the prices moving forward. So I believe the momentum play can be taken into Bata India at current levels. You need to keep a stop loss below 1690 levels from here on, and I can see the potential on a higher side is of 1780 levels on positional basis. The second stock would be from an auto sector. We have been seeing, the auto sector has not been performing in the market if I talk about M&M or if I talk about some other auto stock. But yes, Bajaj Auto is still looking good onto the charts at current levels. And from last 5 to 6 trading sessions, we have been seeing, some consolidation phase going into the Bajaj Auto. And on shorter time frame, this stock has given a breakout in today's session. So I believe the momentum play can be taken into Bajaj Auto as well. Need to keep a stop loss below 3200 levels from the current level, and the upside potential is for 3320 levels. The last stock is from the banking counter. The stock is Kotak Mahindra Bank. Currently stock is trading around 1675 levels, and only the Kotak Bank can see the potential on a higher side towards 1710 levels in 2 to 3 trading sessions. You need to keep a stop loss below 1655 levels from the current levels.
Second call or third call, but hey, you never know. It's a crowded trade. It may not quite work out as well. But Kshitij, bullish on Kotak Bank as an idea. Watch out for this one. Well, if you want to be a bullish on a bank, it should be Kotak and it shouldn't be Yes Bank, because not only brokerages, markets have not taken kindly to Yes Bank's board decision to continue evaluating offers made by various bidders and not finalize on the fund infusion plan. The private lender has been scouting for investors for months now. So how crucial is it for Yes Bank to secure the funds, and what if it can't decide on an investor soon? Ira is here to talk about all of that. Ira, pretty interesting timelines, almost a Bollywood movie out here.
Look, we'll come to what has happened in the last few days, but let's step back a little bit as to what has brought us here. Remember that they first wanted to raise capital even before Rana Kapoor's exit happened, right? Then that got delayed because of Rana Kapoor's exit. Then we were waiting for a new CEO. Then the new CEO came and he said, I need to raise at least $1 billion. They tried to go to market. They couldn't do it. They raised a smaller QIP. They got $250 million or so. Wasn't enough. So they said they want to raise more. And then they kept going to market with different versions of the story. So I think one question that is legitimate to raise is the management of this fundraise, right? You have a certain amount of capital required. Yes, you should put that out to market, but do you really need to go back and forth on the manner in which this fundraising is going to happen? Just to give you one example, in October, for instance, GIL went on record with the Press Trust of India and said that there is a tech investor or a strategic investor who's going to come in. Clearly that didn't materialize. A November 29 board meeting, they put out a list of investors. Had they vetted those investors at that point in time or not? Because clearly 85% of the fundraise is coming from two investors whose track record isn't easy to judge. And at yesterday's board meeting, again, they came in and said that we are looking at favorably the Citax bid, that's 500 million. And then they said that, Irvin Singh Barech, that remains under discussion. What aspect of it remains under discussion, it's tough to know, because as Bloomberg News, BloombergQuint and others have reported, there are various question marks on the credibility of that investor, particularly as a large investor in a bank. So what are they doing? What is this management of the fundraising process is, I think, the first question that must be raised. And if you pull up the stock chart, you guys have been tracking this on a day-to-day basis, but you can see the volatility on that stock, right? Those are some of the events that are mentioned, which is a Bloomberg function. It'll show you that every time there is some such statement in some media house or the other, the stock either jumps up or comes down. This is unnecessary volatility, firstly, to be created in the bank stock. Okay, so let's leave that apart, and you can say that that's a subjective judgment. So let's get into the numbers and see what we need to worry about at this point in time. Their capital numbers, 8.7% is what they look like, CET1 capital at the end of the Q2 numbers. So the question is, what does it look like at the end of the next quarter numbers? There is going to be capital that is going to get used up in the provisioning that is going to be required. Remember, their provision coverage ratio was quite low. They do need to worry about that as well. Any new bad loans getting added. They've got an 81 bond coupon coming due. Will they be able to meet that coupon payment? Probably yes, but there will be some uncertainty about that as well. I just want to pause for a minute here and not draw a comparison, guys, but just take you back to a period when another large bank was in a position of a confidence crisis, and that was Axis Bank. We've forgotten about it then, what was happening then, and everybody thinks Axis Bank is fabulous, but in 2017 there was a large confidence crisis there as well. There were rumors swirling around of a takeover bid, etc. What did that bank do? They did a large capital raise. They brought in $1 billion from an investor like Bain Capital, another $500 million from Capital International, LIC put in, and after that, of course, the bank continued to have its share of troubles, but at least the confidence part was addressed. And I think what Yes Bank has done is not been able to address the confidence part, and in some ways, I would say that they have added to some of these confidence problems as well, which is why this morning you have seen brokerages raise the alarm bells that some of them have, and it's two specific brokerages which have raised the question as to whether Yes Bank can remain a going concern on an independent basis or not. Nomura said, can they remain a going concern? And then they went on to speculate about some possible merger options. Macquarie Research titled their note, "Nationalization Soon?" And they're raising questions. This is all speculation, of course, but they're drawing comparisons between banks such as United Western Bank, Global Trust Bank. I do have to say that I don't find those comparisons accurate, though, because both in the case of Global Trust Bank and United Western Bank, there was large sort of, actions that the RBI had pointed out which were not in keeping with regulations. We have not seen that in Yes Bank's case, except for the divergences in some issues under the previous management. So I personally don't think some of those comparisons are accurate, but nevertheless, those are the only benchmarks that we have to go by. Bank of Rajasthan, GTB, United Western, all were very, very different and far more serious issues, at least in public domain, that were there when these banks got merged. I also think there is one step between here and some of these scenarios that Nomura and Macquarie are raising, which is prompt corrective action. Remember, Yes Bank is not under PCA yet. They have not even hit the triggers of PCA yet. So my question is, would the regulator not first put them under PCA, force them to shrink the risk on their balance sheet, and then see if anything more dramatic like a merger is required? My guess would be they would. The only flip side to that argument is that Yes Bank, is a 3.5 lakh crore balance sheet, and if the regulator feels that there is contagion risk, maybe they will skip forward and take something more dramatic as a measure. But I think the first step to watch is what happens on the bond payments and whether at the end of the December quarter they breach any of the PCA triggers.
So is there any deadline to all of this, December quarter, or there's more time for all these?
There's no deadline, except that some of these sort of events
intervention comes in.
Well, it depends on what the December numbers look like, right? The net NPA numbers have to go up above 6% if one of the thresholds on PCA need to be met. Their capital levels would have to fall if they have to fall within that bucket. So I think the December quarter numbers, both to judge some of these regulatory triggers, also to see what is the kind of trust depositors have or have not maintained in the bank, will be critical. And Ravneet Gill this morning has gone on channels like ET Now and said that they will get at least 500 million by the end of the quarter. So maybe they will. I do want to, for the viewers' sake, say that we do have interview requests in with Yes Bank. We have not spoken to the management yet, so we are depending on what they've said to others.
Yeah, well, let's see if they can bridge what a lot of people are now starting to say is a bit of a trust deficit that has come in between when Ravneet Gill came in first to now. And let's see if that happens. But Ira, thanks so much for putting all of that into perspective. That's Ira Duggal with an analysis of what's transpired in Yes Bank over the last, let's say, not just immediate in the last couple of months, but over the last few quarters, if you will. And what's brought Yes Bank to where it is right now. 41.85 for this one, correcting very, very strongly. Can it rise?
Look at the time in Neeraj, just when all these news pieces come out, and it's trader's delight, I would call it today on the short side. It's come out of the FNO ban, but I think it's going back because the data says it's crossed 106% the total open interest as a percentage of MWPL. So if it goes back into that, I think there's no stopping now from current levels. The support in terms of options data was 50, which very, very easily got breached in the morning. Futures trading at a discount only tell you that the stock's headed lower, even from the current levels. There is heavy shorting, there is aggressive call riding on the option side today.
Very difficult to find anybody who would go long on this, but Sunil Shah of Turtle Star with us on the show. Sunil, just good afternoon.
Very good afternoon.
And a thought here, I mean, from an investor's perspective, there is somebody in the morning who said that maybe the risk reward is not completely against Yes Bank because according to him, too big to fail, large book, can't be allowed to go under, so on and so forth. What's your sense? Is it a falling knife and a punt if you take a call on Yes Bank right now, or is it an informed investment that you can make on a large book and a bank which is not under PCA as yet?
Yeah, I think market is really worried about how much is still hidden. Post the QIP, the NPA numbers, at that point in time were a different picture. And then the disclosure was much more. So really it's the uncertainty about how really the book is, perhaps, which is why you cannot really decide whether it's a value buy or a value trap that you could get, So the reality is unknown to the market, and that is why you have various other options, I guess, at this levels in the market where, it's more of safety rather than catching a falling knife, because you really don't know.
So. A lot of people were also a bit taken aback, though I don't think it's as big an issue at all with the divergence numbers reported by State Bank of India. It's the number, maybe absolute number may be large, but as a percentage of the book, not really that large. What did you make of that?
Yeah, so I think close to 11,900 crores of that 26 lakh thousand crores is going to be like a small percentage. So given the size, it is there. But again, the direction is what, matters a lot. Meaning still right now, are we still seeing the cycle of NPA come back again, which is a more worrisome fact, So are we behind us or not? That is where, the banking stocks or the overall, because SBI is the big daddy in the entire industry. And now again, the new surface which people are talking about is going to be on the mudra loans and all of it. So if you are moving from the corporate to the retail to the agri and the mudra space, still the cycle is not done. So if that is what is going to disturb, then when are we going to see actual earnings turnaround and actual credit offtake? So all of that is really disturbing the market, whether we are coming off the economic issue and turning around in terms of corporates or not. But if you daily hear this kind of news of again NPS coming, whether it's from SBI or any other bank, etc., that's really going to keep the investors away for some time. They might as well wait before really taking any action in the market as well. So that's more to be.
Do you look at banking stocks at all right now, or you would just stay away and wait out to see whether the NPA cycle has peaked out?
Yeah, so the ones that we have been investing in our client portfolio has been largely ICICI Bank as well as Axis Bank. There again, our thought process has been more on the change of the top level management. So that is the thought process with which we went about investing into the bank. That as a large franchisee, yes, there have been problems in the past, but with this new people coming at board, things are going to revive back, and that is what has been indicated even in their quarterly guidance as well. The numbers are also talking about it. So market has held on to one and maybe rewarded the other one. Like Axis Bank has held on to itself, and ICICI Bank has got the rewards.
Do you think, sorry, just to come in, do you think it's the Suti rumor which is keeping Axis Bank pegged down?
I think Suti is going to be an issue in terms of the float which will come through, the selling from the government side certainly, and because the fiscal deficit and all of it is going to come in the market. The appetite has also been there. So investors are there who could be looking at, utilizing that as an opportunity, big long-term investors.
No, but I'm just wondering if the underperformance of Axis versus ICICI has got anything to do with this overhang, or is it other fact? Because last 3 months, ICICI had 30 to 33%, Axis has been about 14-15.
Yeah, I agree. So that can be one of the factors as well. And also you keep on hearing, the top level changes at the bank level in the Axis Bank universe. So you're seeing key people also moving away. Now, recent one has been the CFO giving in his paper. So, you are getting in fresh people from other organizations, which is a very positive thing. But at the same time, if you are taking the entire organization together, which is what is happening in ICICI Bank in terms of, charged up people to do the business, and their KRAs are linked to the profitability of the bank, which is the right thing to do as well. So ICICI Bank is in that sense, and maybe market is a bit jittery whether the entire exercise is what which will eventually result as an organization. So I think that could be the factor why perhaps it is holding back, apart from the SUTI, which clearly has been the case.
Okay, just before I move on to my next question, do you expect, how much return do you expect even from current levels for ICICI Bank in a scenario when corporate lending is not picking up and there's signs even the retail book is softening for majority of the banks?
So my sense is that it could be a large cap outperformer to the market. I'm not looking at purely from a return perspective as such, in terms of the investing.
So no fresh investment at current levels is what I want to know. Would you advise doing that?
I'm doing my SIP into those stocks. So that is continuing for a long period of time, and that is why I'm adopting this as a process. The second thing which I think is that given the SEBI's criteria of the large cap fund being the top 100 and that, so I think overall in the large cap universe where you'll be seeing modest kind of growth with good kind of improvement in the ROE, that is what will trigger even the investment flows to come into it. So meaning I was just looking at BSE 500 is like almost 94% of the total market cap, and the top 250 stocks is 94% of that. So it's 88% of the universe is just the 250 stocks, and within which, if I try to see where do I see that the ROE improvement is going to come through, I can just count the companies on my fingertips. So I'm just betting on the safe zones rather than putting a price target to it.
Okay, let's move away from the banking space but remain just within the ambit of financial services. Correct me if I'm wrong, I think you also liked the gold financing companies in the past, and time and again we are seeing outperformance, be it Manappuram, Muthoot. Are you still continuing with your SIPs in that?
Yeah, so we have done our SIPs into that. I think Muthoot had given one small correction when the Kerala episode came in, and we did invest for our client portfolios, that we use that opportunity to get into that. I think we are still at a comfortable value zone. It's there, but I think the risk reward are more neutral from now on. Both the companies have done international fundraising as well. So domestically, the financing cost for them was somewhere around 9%. They've done it at about 9.5% or close to 10% in terms of the fundraise. The fundraise was what the fund was an issue for them to get growth in the last quarter. And now with the funds in place, I think the growth will still come on. So my sense is it would be again an outperformer. Valuation wise, we're still not in that top quartile of valuation. Pretty modest on the valuation as well, with very high ROAs, super NIMs, very low NPS. I still think it calls for an investment opportunity in both of them as well.
Okay. At some point of time in the show now, afterwards, we'll also talk about this possibilities of the partial credit guarantee scheme relief to NBFCs and housing finance companies who have triple B and below assets as well. But that conversation will come up in a bit. We've spoken so much about banks, we need to move on to other things as well. Adani Transmission, for example, interesting deal done. It has sold 25.1% stake in Adani Electricity Mumbai to Qatar Investment Authority in a deal worth around 3,200 crore rupees. Sharad Dubey joins us with the details. And Sharad, can you give us some details about one, the math, and two, what does this do for Adani Transmission?
Well, yes, Neeraj, the deal itself is valued at 3,200 crores rupees of enterprise value. So basically, the people in the know had given us the breakup of the deal. That is around 2,000, almost 1,200 crores will be, in a cash consideration, while 2,000 crores will be in the stake of preferred share loan holder. So this will be paid by Qatar Investment Authority. So this itself is a sovereign fund from the state of Qatar itself. So this will be actually a quasi-equity in nature for the preferred shareholders. And last year itself, Adani had acquired this Mumbai business for an enterprise value of 12,100 crores. And this deal, in the current transaction, the enterprise value has is at around 16,100 crores. The transaction is subject to regulatory approval and is expected to be completed by March 2020. Apart from this, Neeraj, if you see the debt levels of the company, they stand at almost 9,000 crores when it comes to the current debt, and in terms of terms loan, and rupees 1,000 crore in terms of working capital loan. The equity value stands at almost 4,800 crore. Now going ahead, looking at for the company itself, so this is if we go through the details as such, Neeraj, we see that the investment will be 3,200 crore of $450 million, and this will actually ensure almost 30% of electricity will be used in the solar and the wind area itself by 2023. And apart from this, these investments will actually be, to the power going ahead for the National Vision Fund of Qatar.
Okay. Sharad, thanks so much for putting that into perspective. So the interesting bit is, on the face of it, the EV may have looked at about 12,800, but the current transaction, considering the monies that come into the Adani Transmission company as well, done at an EV of 16,800 crores in 2 years, from 12,100 to 16,800. But more importantly, Sunil, if you track this group, the last 3 months, they've been hyperactive, right? Total investing into Adani Gas. They've been on the lookout for a lot of other deals as well. Now, Adani Transmission and 25% in AEML as well done. Do you like any of these Adani Group stocks? We'll get a technical opinion too, but fundamentally, do you like any of these names from a medium-term perspective, investment perspective?
I guess I look at some of the simple parameters in terms of the debt which is there in the group. And if the group is largely linked to the government side, so it's largely a B2G business, and if it's heavy on the debt side, I tend to keep away from that pocket. So maybe not much of a view on this group right now.
Okay, so you're not comfortable buying this, but just look at the kind of gains that some of these stocks have made. And it's fair, by the way. You don't have to fish everywhere. You only fish within your circle of competence. Sunil doesn't want to go out and look at companies which are highly indebted in the B2G segment. But well, the stocks are reacting. Adani Transmission for the last few days, in the last 1 month, has moved up from 295 to 339 already. Manav Chopra, if we look at the charts out here, do you think there is more in store, or is it reaching some points of resistance, Adani Transmission?
See, Adani Transmission has been in a good uptrend so far, and there has been we have witnessed a good amount of volumes also, as the prices are forming a series of higher highs, which is a positive signal. And as the prices are trading above its important support of 325, it definitely indicates some more upside into the stock. I sense we could see a rally towards the levels of 375, 380 in the near term perspective. So overall, we would continue to maintain a positive bias in the stock, and eventually if the stock sees a short term dip towards the levels of 325, 330, one should definitely look to buy when at the lower levels.
Kshitij, the other one which has bounced back very smartly today is GAIL, after hitting 52-week lows yesterday, up about 5% today. How does it look on the charts?
See, if I look at the chart structure of a GAIL particularly, this is clearly a kind of a short covering thing we have been seeing from lower levels. As a stock has already, it has hammered down from 120 levels towards say below towards 110 levels. So this is a kind of a short covering kind of a thing. I don't think so. This rally into the prices can sustainable at the higher levels, because at a higher level, once again, the earlier, which was a crucial support, 120 levels, now it will act as a crucial resistance level. So as far we are holding below 120 levels, I don't think so any sharp upside into the prices would hold on.
Okay then, so that's as far as some of these movers in today's session go. By the way, the commodity stocks too have corrected, but I was just trying to look at stocks which have gained or lost quite significantly in the last 1 hour before we move back to the fundamental discussion. In fact, get in Sharad Dubey as well for the Fab 4 stocks of the day. Look at the move in IFB Industries. It's shot up like a dream, really, 5.5% up, but a large move in the last half an hour of trade. BF Utilities is the other one which has shown a significant up move in the last few minutes of trade as well. So a bit of a spike in that stock. And from amongst the auto anchs, I think Endurance Technologies, which was in the red, now moves back into the green. So that is the other one which has just seen a bit of a movement, has Endurance Technology. So 2 or 3 names that you got to monitor from a sudden movement perspective. There are also some other names that you need to monitor from a Fab 4 perspective, 3 or 4 names which would have stood out. And let's try and find out what's made it to Sharad Dubey's list of the Fab 4 stocks for the day. Sharad, well, you already told us about Adani Transmission. What else makes the cut today?
Well, yes, Neeraj. The first one being HDFC AMC. The stock has up almost more than 3%. It has snapped its 5-day losing streak, and even a brokerage company, Haitong, has initiated a buy with a target price of almost 3,435 rupees. The brokerage stated that the company is well stated, to have a consolidation in the Indian AMC industry as well, and also the business itself is a high ROE, and estimating, and also people are expecting an expected dividend payout ratio of 80% going into FY20 to FY23. Apart from this, the company has been able to weather the regulatory issues, which is pertaining to the Indian economy in the NBFC space. Apart from this, we have Manappuram Finance, which is up almost 5% after fresh longs is seen with a high open interest of 9% and the volumes trading at almost 2 times its 20-day average. And the next stock is GAIL, which we are discussing earlier. It is almost 5.4% up as MK has come out with a rating, maintaining a buy rating with a target price of 160 rupees. They believe that AGR hit concerns have actually already played out, and the core business outlook remains mixed, but the downside is unlikely and the valuations come attractive. And the last stock is Safari Industries, which is up almost 3.2% after it was reported in the bulk deals itself that Malabar India Fund has acquired almost 1.15 lakh shares that roughly translate to almost 0.7% stake in the company. Back to you.
All right, Sharad, thanks a lot for bringing those Fab 4 stocks of the day, and the markets too have recovered from those lower levels. So clear support coming in at 11,850, and Bank Nifty just about trading flat. Remember, in terms of sectoral indices, we have seen participation, by the way, coming back from IT, how TCS was falling in the last few sessions. That was dragging Nifty IT lower, but today that's your top sectoral gainer with gains of about nearly 1 to 1.5%, and TCS too has recovered at least. That's trading above the mark of 2,000 at 2040, and those are all your IT stocks there on your screen. Manav, any IT company at current levels where you would like to initiate a trade, be it Infosys, TCS or HCL Technologies?
See, Infosys overall has been in a good zone. It has been forming a series of higher bottoms on the daily charts, and it has managed to exceed its important resistance level. I sense if the momentum definitely holds in the near term, could see a good momentum rally on the upside. So on the lower side, 710 to 15 would be the important support clusters, and eventually if the prices start moving towards the levels of 725, you could see a rally towards the levels of 745. So for the near term, I would definitely put my bet on Infosys from the IT packs, and HCL Tech and Wipro ideally would see a negative bias to consolidation phase, but Infosys could definitely see a good momentum on the upside.
Okay, let's see if the stock scales higher from current levels or not. Sunil, in terms of any new themes or individual stocks, are you looking at something closely as a fresh investment now going into New Year?
Yeah, so my thought is that in the new year itself, I think PSU is going to be the pack to watch out for, and within that space itself, I think there will be a lot of re-rating which will happen in case one of the disinvestments actually fructifies in the next 3-4 months or so. So I think there is one opportunity there in terms of CDSL. It's a regulatory business. They are the parent in terms of the already depository, but the trigger which I think is going to happen in terms of, apart from the listed company which is in the demat form, it's going to be the private limited companies also, which will be mandatorily required to have the shareholding transactions as well as the ownership in the demat form. And if we see the data, the kind of number of private limited companies in our country is almost 19 lakh, of which 19 lakh, almost 11 lakhs are active ones. The revenue that they charge is something like 5,000 rupees per annum in terms of each entity. So I think over a period of time, if this really fructifies, that entire thing, it's right now there in the form, but it's question of just the notification coming in terms of it becoming mandatory. So that opens up almost about 550 to 600 crores of incremental revenue opportunity for maybe CDSL and NSDL both. So the top line of CDSL is something around 160 odd crores. And this is like 3x kind of size of the opportunity. Even if they garner almost 30-40% share, I think it could be a good, it's a zero debt-free company. It's very high ROEs, 50% PAT margin. So it's a specialized service. We all know that. So I think this is where we could see some kind of triggers come in. So maybe that could be one such opportunity, along with the entire re-rating of the PSU bucket which could happen if the disinvestment actually happens. So I think that could be one such idea to maybe look at.
So what valuations does CDSL trade at? I'm just trying to think that if you're talking about a re-rating, does it trade at abysmally low valuations because of which? I do remember, Sunil, that it's come off a little bit from the levels that it was trading at a point of time.
Sure. So even at this point in time, it is at about 30 times. But if I look at it from the perspective of the ROEs that it generates, and then look at it in terms of the earnings growth, which if this comes into place, so if 160 crores of top line which is there, and if we are talking about 500 crores opportunity, say half of it, so maybe about 200, 250 crores can be an incremental revenue. So we are talking about doubling of PAT on that size over the next 3 years. Kind of, it could be still maybe about 15 or 18x. So that sense, maybe we could see some kind of upside come into this company as well. It's not cheap at this price. It's just about whether the event actually happens or not. And I think it's just a notification which is pending right now.
Okay. Wondering if there is one last question, any other business in the similar vein than capital market businesses usually will be high ROE, high profit margin business. I was seeing yesterday, unless I'm wrong, HDFC, AMC, EBITDA margins are northwards of 75%. So a lot of these businesses anyways enjoy that. Is there something which is non-PSU and larger opportunity, not event dependent?
Non-PSU, I think the margin to this levels could be in the FMCG pack alone, and there the valuations will tell me not to open my mouth to take any of the names there. So yeah, so that's going to be a difficult one.
Okay, Sunil, we leave it at that note. Thanks a lot for joining us and taking us through your views. And CDSL is the pick that Sunil has picked up, at least for the next calendar year. By the way, the stock's not performed this year. It's just about trading flat, or it may have given negative returns of just 2 to 3%. There you go. That's the performance of the last 12 months. Last 3 months, however, some bit of recovery has come. And remember, BSE also holds about 21 to 22% stake. There was an OFS recently where they offloaded some stake. But having said that, we're back above the mark of 11,900, and maybe we're going to have a positive closing and a good closing above a psychological mark that we were looking at least for today's session. Some buying interest coming back just in the last 5 to 10 minutes of trade. Kshitij, at current levels now, 11,900, 907 on the index. Would you initiate any fresh position on the index?
See, in last half an hour of a trade, we have been seeing, Nifty moving from a negative territory to a positive territory, and in fact holding above 11,900. So from the risk reward perspective, I would be comfortable taking a long positions from current levels. If you consider about the spot levels, it is trading around 11,900 levels. So today's low can be keep as a stop loss around 11,840 levels. That can be used as a stop loss level for the long trade, and I would like to give a target towards 11,970 to 980 in 1 to 2 trading session if this kind of a short covering happens after today's closing as well.
Okay, that's the view coming in on Nifty. On that note, let's also bring in Yogesh Mehta of Yield Maximizers, who joins us on the show now. Hi Yogesh, good afternoon. Good time to have you. Markets have recovered at least, so the mood has changed in the last 10 to 15 minutes. What do you do? What are you advising your clients at current levels?
Navneet, overall, when we look at the markets, and since last 2 days, it's a depressed kind of a mood in the market. And of course, polarization, top 5 stocks are not showing any sign of correction. But yet, there are more of a pockets where the correction has happened. Last time we have discussed about the SBI, and it has corrected today to 310, 312 level. So that gives again a good opportunity again because the divergence reported into the annual report for 12,000 crores is more or less just a decimal point of the overall loan book. So it should not impact much, and plus they have got a backing of government, so I don't foresee that there will be again any disappointment or reactions from the investors or the institutional investors. So this again provides a good opportunity to get into the PSU banks, and similarly there are many pockets where disappointment were there, but stock prices corrected almost by 15-20%. In some of the cases in IT, it has been corrected by almost 5-7%. So I think overall the mood has just changed a while ago. But overall, I was looking at the opportunity throughout the day where one can again look at any kind of a trade on the long side, because short doesn't make much of a sense because private sector banks and the bank Nifty is holding on very strongly. And overall macro and micro are still into the place. There is no much change and nothing from the foreign side.
Okay, one such stock from the broader market which is doing well is Ipca Labs. So let's just pull up that stock. It's seen gains of about 6 to 6.5%. It's sitting at days high. If you could just also pull up this year's performance, let's see if the stock has given any returns in this year or not. Yes, it has 40%. Yogesh, I don't know if you track Ipca Labs, but if you do, any fundamental thoughts here?
Ipca, I have seen maybe 2-3 quarters back where performance was not up to the mark, but then last quarterly numbers which have come, that has shown a very totally different picture than the other pharmaceutical companies, wherein margins, profits, EBITDA, on the EBITDA level as well, they've done very good growth overall on the domestic formulation and the other businesses. So India facing pharmaceutical company, domestic formulation is the only Ipca where it has done wonderfully well apart from the sectoral players. I think still, though it is a little bit of expensive valuation right now at this level, though it has moved up by 40% odd, but I think the growth opportunity still remains into the same in this name. And would be assigning more, would be having a more strong view on growth for next 2-3 quarters further. So I think it would be good enough to hold on to the stock or maybe add on to the stocks.
Okay. Well, Ipca Labs, and this one has been a surprise package in the pharma pack for sure. Quite a stunner in terms of the movement. What is doing really well for itself though, and something that I think came as an idea today from Kshitij, is Kotak Bank. Now at 1688, so rising and shining and closing in towards the highest point of the day, arguably fresh life highs for itself. A lot of talk about some activity or some action happening here. Now we already know Kshitij is bullish here. Manav, would you at these levels be comfortable initiating a long on Kotak, or would you now leave it alone?
See, Kotak, definitely it's in a very, very strong momentum, and eventually we do see this going higher. And it has given a fresh breakout today, and this is one stock which has actually taken Bank Nifty from its intraday low. So eventually we see this going towards the levels of 1730 to 1750 on the upside. One can also initiate fresh longs at the current levels for a short-term momentum play. This could also be a good BTST trade. Stop loss for this can be placed at 1665 on the lower side.
Okay. Watch out for Kotak Bank. So there seems to be a bit of a consensus as far as the bullish view on Kotak goes. The other one which has really remarkably jumped up is Z Entertainment, up about 4.67%. Yogesh, come in here. Does it provide value, or is it difficult to ascertain that?
Value neither is too difficult to say Z, but last time we had discussed this, and I think 250 or 270, this is the band where would be comfortable to have an opportunity trade rather than with a fundamental view for the long term. For the timing, 250, 270 band will provide, will have a, I think the risk reward ratio would be favorable for at least getting into the opportunity trade. So I think this would be one, but clearly looking at other companies which have corrected a lot, I would opt for others rather than Z.
Okay. Yogesh, heard anything on Sterlite Tech? The stock was down about 10%, currently about 7.5%. What's gone wrong here? It's completely out of favor with anybody.
Neeraj, unfortunately, I have dropped this track of Sterlite Technologies erstwhile two quarters back, and that time the disappointment was there. Though 5G rolling and others on the telecom sector side, there are very much hurdles are there on the capex side. I think probably that would have hurt further. I missed the opportunity to listen to the management today, so won't be able to comment there further.
Okay, that's Sterlite Tech for you. No respite. The stock's down about 7% in trade, and a couple of other stocks which are doing well. Of course, GAIL is something which we mentioned how that's recovered today. Godrej Consumer is the other one, and this one, by the way, had corrected from levels of about 730 just 7 to 8 days back, and some rebound seen for Godrej Consumer today. Yogesh, from the FMCG space, and this is one stock which is not performed in line with its peers. Would you look at Godrej Consumer, considering the last quarter numbers were some sort of a breather when it came to the volume growth?
Yeah, Navneet, the volume growth was better in Godrej Consumer, but again, looking at sustainable margin improvement for the next from here on, from the next third quarter onwards, so that businesses are a little having some headwinds and raw material costs are a little bit of rising, and the product they are having into this lineup have some kind of, I think, headwinds would be there for volume growth sustainable of 10% plus. And that would have hurt this. Similarly, we have seen in Marico where copra prices are really soaring high, and the stock has corrected from 370 odd to 330. Though the result was not that dampener, but yet post the result, even after a long time after result, stock is correcting. I think around 700 or odd, it will be a fairly priced. I don't foresee further upside from here, so hardly it leaves any headroom for upside.
Okay, very quickly then, Kshitij, technically, is there room for upside for Godrej with today's move of 4%?
See, if I look at the technical structure of a Godrej consumer product, it has given a sharp breakdown below 690 levels, which was the crucial support levels on daily charts as the long-term moving averages were placed over there. And in today's session, we have just been seeing, kind of a short covering after a 3-day, 4-day consecutive fall. So on a higher side, as far the stock is trading below 685 spot levels, I don't think so that the long positions can be taken at current levels. But yes, since we get the closing above 685 levels, then definitely I would be comfortable taking a long position.
Okay, that's Godrej Consumer, but let's get your market voice. Sameer Narayan of Renisa Capital says that it is a better than expected rate of change that affects the stock price performance of banks like ICICI, Axis and Kotak. Also listen in to his views on the AMC and the insurance space.
The way it works is that market always rewards the most improved performer rather than the best performer. So if you look at the rate of change in each of these three, wherever the rate of change has been better than expected and has been a consistent beat, for example ICICI Bank, I think that's where the stock price performance is also sort of kept in line with the beat. Now the challenge is that today you cannot be looking at a fresh investment with the point of view that the return expectations will be similar to what has happened in the recent past, because the way it works is that today most of these banks are now priced to the fact that they have been able to generate those kind of ROEs and keep asset quality in check, and the fact that hence the valuations are quoting where they are. They're all quoting more than 2.5-3 times book. So I think from here one needs to take an assessment as to where is the best risk reward equation from an investor. And I think most of these private banks, yes, although the growth will still be there, it may not be the 20% plus, but they still continue to grow the 10-12%. And the fact that yes, you are beginning to see some signs of stress even in the retail book, because the fact that there have been job losses, there have been people have been finding it difficult to keep up with the EMIs. I think those are factors that these banks also need to be able to grapple with, because up till now that was never a concern from an investor standpoint and for any of these three. I mean, that was a given. Retail book was supposed to be prim and prime, and it was supposed to deliver 20-25% growth and with great yields. So therefore that was a part of business that was on an autopilot mode. I think that also is coming into question. So are we factoring that into the market valuations? Maybe not.
Do you reckon that there might be a prolonged pause or a pause with a slightly downward bias in the near term, or these steep falls that we've seen in HDFC AMC, for example, I'm using that as a poster boy, might get bought into?
Neeraj, if you look at the trailing returns of these names, most of the AMCs, I mean, we have a couple of them listed, they have more than doubled over the last year. Now that has coincided with the fact that you've seen a large amount of AUM accretion, MF flows have been strong, SIP flows have been constant at $1 billion plus a month. I think those are given. Now for that, the stocks have been awfully rewarded as well, because if you look at global valuations comparable versus India, it's a very it's a moonshot in terms of the Indian valuation. Now the Indian market, I don't see will be able to afford that kind of growth consistently for that long a period for us to say that these valuations should remain. So I think after such a strong performance in the recent past, these stocks should consolidate, which is the way of life is, that there needs to be a mean reversion, there needs to be business challenges need to be surmounted. I mean, we've seen the last data for November, the flows have shrunk quite a bit. So let's see how people react. This could be a momentary phenomenon, festival season, year end, whatever. But one needs to see more data to be able to get confidence for us to keep paying and bidding these stocks at these prices.
The other pocket also is the insurance pocket. When we're talking about some green shoots from there as well after 2 months of sluggish growth, you've seen a decent enough APE growth as well. So HDFC Life, SBI Life, ICICI Pru, these names come back into focus. Is this a business that you feel, and the perpetuity of it could lead to a further attraction of flows?
See, it's pretty much the same as the AMC business because the penetration level is low, so that same argument is constant in both cases. But in insurance, I think the way one needs to look at it is that in India, over the recent past, there are seasonal factors. You have the March end phenomenon, the March quarter is typically heavy, so those kind of things. But even for these names, the valuations are pretty decent because the growth angle has already been built in the price. Now the growth needs to deliver. So the moment there's a small question mark on the growth coming off, even in the short term, these stocks tend to take a pause. Now, is there an opportunity or not can only be answered in case the growth pickup is also equally quick. Because what happens is that, today, even from an investor point of view, I frankly don't have too many options to invest my surplus. So it's a question of, where do I go? See, real estate was a big gorilla in the room. Unfortunately, that's not moving. So, then you come to gold, you come to equity and insurance and so on and so forth. So I think that's where perhaps it's also a question that lack of alternatives is by default funneling a lot of the flow into these names.
Okay, that's a market view coming in. And by the way, markets are at day's high. Pull up Motherson Sumi as well, which is sitting at day's high. Some recovery coming by after an exchange notification coming in from one of the lenders, I believe, that's IDBI Trusteeship Services, where almost 3 crore shares which were pledged with them have been released. That's what the current release, which is there with the exchanges, says. And more probably the reason why the stocks moved from those levels is due to that. Yogesh, very quickly then, are you seeing any green shoots for autos or auto wangs? Is there anything you're betting on?
No, Navneet, I don't foresee that there will be any green shoots for auto for near term, at least for the month of year end would be a discount month. And again, in January, we may see some traction, but not up to the mark. So probably I would clearly avoid right now on two-wheeler and four-wheeler for any kind of addition into the portfolio or opportunity.
Okay, avoid at the moment, be it auto wangs or pure play auto companies. But let's get you some closing strategies. 10 minutes to go. Manav, any BTST or any STBT for tomorrow's session?
Yes, I have one BTST, which is buy on IndusInd Bank. In fact, the prices have seen a series of decline from its recent peak of 1600 and is bouncing from its important support levels. So we recommend a buy into this with a stop loss of 1400 for an upside target of 1465. The other call would be a buy on Bata India. The stock has seen a breakout after a sideways consolidation and is trading above the short-term averages. We recommend a buy into this with a stop loss of 1700 for an upside target of 1755.
And Bata is also being witnessing some long positions today on the futures side. Kshitij, what about you? Your closing strategy?
Yeah, as we are saying, markets are trading at days high right now and currently holding above 11,900. So this is a positive signal moving for the market. So I would be comfortable taking a BTST trades. In fact, I have two trades for as a BTST. First one is HDFC Limited. Currently, stock is trading at 2320 odd levels. And in last half an hour of a trade, we have been seeing some kind of a long build up into the prices. So one can take as a BTST trade in HDFC Limited. Need to keep a stop loss below 2280 levels from the current levels. And on a higher side, I can see the potential to move towards 2375 to 2380 levels. The second stock I would like to take a long position is Mindtree. Mindtree has been consolidating from last 2 to 3 trading sessions, and once again in today's session it has given a fresh breakout above the key resistance level, which was placed around 750 levels. So for a BTST trade, one can take a long position by keeping a stop loss below 740 levels from the current level, and on a higher side I can see the potential towards 770 levels.
Real estate stock that is just gone off the last 2 or 3 sessions is Oberoi Realty. It's down 3% again today at close to 507, both fundamental and technical perspective. But a quick fundamental perspective first, Yogesh. What's happening here with Oberoi, and would you use this opportunity to buy into it?
Oberoi, Neeraj, really, fundamentally, there is not much of a change. But apart from that, we have a meeting where NBFC and NHAI and Housing Finance Company, HFCs, will have some green shoots. But Oberoi has no debt. So virtually any shoots announcement in perspective of 15, 20 days down the line, not immediately today, so will not be beneficial to anything into that. So I think they are Bombay-centric and fundamentally very strong company. But the way DLF is into the limelight right now because of the green shoots expectation, so probably that will remain continue there. But Oberoi around 480 to 500 would be comfortable accumulate for investors rather than traders.
We'll leave it at that, Yogesh. Thanks much for taking the time out and being with us today. Appreciate your time. Manav, any thoughts here on Oberoi Realty?
Yes, we have, the prices overall has been on a sideways trading band, having its support around the levels of 480 on the lower side with resistance of 550. So it's trading in a broader 10 to 15% trading band. So I sense if the prices comes near the support of 480 would see a trading bounce. So, but eventually for a medium term perspective, I don't see any big trading opportunity or any breakout on either side. The stock is likely to be in a sideways consolidation, but the stock which is looking well poised for a momentum rally would be DLF. In fact, it's also given a fresh breakout today. So this could see another upside move of 4 to 5%. So for a momentum trader, I would recommend DLF, but would be avoiding Oberoi Realty for a short-term trading opportunity.
Okay, leave that out. Something else that's moved up, Navneet mentioned Motherson Sumi, so that has had a good move. And Reliance Nippon Asset Management is up 5%. The AMC stocks are up and active today. Kshitij, would you buy Arnam or HDFC AMC or even Aditya Birla Capital for a trade?
See, at current levels, if I talk about, say, Arnam, first of all, the stock has bounced back from its short-term moving averages, which were placed around 330 levels. So for a momentum play, yes, we can take some kind of a position for upside potential of, say, 355, 360 odd levels. But once again, that would be a key hurdle for the Arnam. And on positional basis as well, I don't think so. The risk reward is still favoring to me. So rather, I would wait for more dip into the prices to take a long position on delivery basis.
That's a sharp move that has come in on Arnam in the last 15 to 20 minutes of trade. But what's clearly not recovered is Sterlite Tech, still sitting with cuts of 7 to 7.5%. You've got CSP Bank, which was a recent listing, and that too has come off. I think on the listing day, the stock had crossed levels of about 300, and now it trades at 239. So it's a sharp fall coming with regard to from the listing date. But overall, for the markets, we're closing almost at the high point of the day. Let's go across to Neeraj to find out how exactly today's closing is panning out. And no complaints there, Neeraj.
Yeah, well, the late trade certainly is showing that, Navneet. 1 hour, the last 45 minutes have been pretty strong. We'll talk about the intraday mover a bit. But the headline numbers, 0.5% up for the Nifty 50, 0.5% for the Sensex, 0.4% for the Nifty Bank, and the mid-cap and the small-cap indices will also come up on your screen. The mid-caps recovered a bit, small-caps lying low, but not a bad day. We needed this. This is almost similar to the trade that happened in Friday, just that in Friday's session, we ended flat. In today's session, we are ending in the green. It's a good sign. Now we will speak about the mid-caps and the small-caps. Let me address the large caps first. GAIL, bounce back boy, as is Z. Both of them about 5% apiece. NTPC has some gains. Today the PSUs are bounced back. So GAIL, NTPC, IOC, ONGC, those are the set of names that are doing very well for themselves. Tata Motors 1.8% higher. Asian Paints and Kotak Bank too really surging to life highs. This one has done remarkably well in the face of what's the sluggishness that has come into some of the other highly valued names. What's not done well today? And Yes Bank. Some would argue that off the lows of the day is a respite, but 14% down is a nightmare for any trader on the long side, or an investor for that matter. Hero MotoCorp corrects. Commodity names like Hindalco, Vedanta, Ultratech, for example, correct a bit. BPCL has some losses, and SBI continues to go down. So Kotak is arguably one of the few banking names that is still showing some traction. The others are kind of becoming very sideways or falling by the wayside. Navneet, what about the broader end of the spectrum?
Well, Neeraj, while the markets are closing at day's highs, some flashes there on your screen from S&P that said that they may lower India rating if growth doesn't recover from current levels. Remember, the September GDP numbers were at 6.5-year low of about 4.5%. So that's a warning coming in from the agency S&P. We'll see if there is any sort of reaction in the markets because of these comments tomorrow or not. But talking about the broader markets, mid-cap index also closing at days high, like the benchmark indices. There were a lot of gainers, by the way. Let me start off with Godrej Consumer Accountor, which has been underperforming in the recent past. It had fallen sharply from levels of 730. Some rebound seen today, 3.5% higher. BF Utilities, the stocks moved from 270 to now 345. It was locked in upper circuit with gains of 10%. I think in the last 4 days, it's been locked in upper circuit for 3 days. So some buying, more serious buying happening at BF Utilities. HDFC AMC, after the tepid trade in the last 2 weeks, where the promoters also sold some stake via OFS. I think the stock was back in action today with 5% gains. Gold financing companies were up and about. Manappuram Finance had a great session on the future side. There were a lot of long positions being built here. Affle was up and about. Ipca Laboratories had a great session. This has been one of the outperformers in the pharma pack. Affle is also closing at days high, and Ipca also at days high with gains of 7%. Camlin Fine, after the note came in from Phillips Capital where they've given it a rating of 140, the stocks has had a one-way move since then, 7% higher today as well. NIT Tech was up and about. You had good session coming in for a stock like IFB. I don't know how liquid the stock is, but in the second half, there was some buying which came in for IFB Industries as well. On the losing side, no major recovery seen for stocks like Sterlite Technologies, which was down 7 to closing with cuts of at least 7 to 7.5%. Inox Wind also was down today. Equitas Holdings didn't have a great session. Remember, tomorrow being a listing day for Ujjivan Small Finance Bank. Actually, it recovered from the lower levels, but still down about 3%. And Havells was the other stock which closed in the red today, down about 1% to 1.5%. And looking at overall closing, I think 11,900 was a mark on Nifty that we were watching out for. A closing above that will definitely be viewed as a positive sign. But let's see if the markets tomorrow reacts to the warning which is coming from S&P. If the growth levels do not recover from where they are, 6.5-year low for at least the September quarter, they may look at the ratings. They may revisit the ratings for India. So these are your closing levels. Nifty closing at levels of 11,910. And Sensex closing above the mark of 40,400. Quickly pull up the broader markets, Neeraj. The market breadth yesterday was quite weak. I think that recovered in the second half of the session today.
Yeah, they did. And I think Naveen makes that interesting point as well. The market breadth should come up on your screen. A bit of a pullback, but this was after a dramatic this thing as well. So pretty important, because had that not happened, then the market breadth would have like really adverse. But yeah, a bit of a recovery for sure, Naveen.
This tells you it's still in favor of the rally has been polarized. For the entire listed universe, we're still not seeing any meaningful buying coming about. Lastly, just take a look at the participation as well, how the turnover panned out for the day. Tomorrow being the weekly options expiry day, we've seen a pickup for the NSE F&O turnover, and for cash side, it's higher than yesterday, but remember, we've come off from those levels of 40,000 that we were seeing in the recent past. So participation definitely on the lower side in the last 4 to 5 sessions. On that note, let's get you some closing thoughts from our technical experts. Manav, how would you approach the markets tomorrow?
See, I sense for tomorrow's expiry, the markets would be trading in this band of 11,900 to 12,000, and the expiry would be in this trading zone. So I don't, until unless we don't see a break above the 12,000 levels, I don't, the markets will not witness any trending move. And there are some very heavy call writers positions at the 12,000 call. So we need to close above that for any strong unwinding and fresh long position. So those would be the key levels that we intend to watch out for next coming few trading sessions. But keeping that in play, I expect the markets to continue witness a choppy trading session at least for tomorrow and coming few days.
It's very interesting as to what the markets have done today, simply because, frankly, just before I get to Kshitij, keep this in mind. We are up and about in trade, but you saw the S&P flashes on your screen that the ratings might be cut if growth doesn't recover. We don't know when will growth recover, so whatever rating cuts come. And by the way, the yields reacted. I think the 10-year bond yield, if you can pull that one up on the screen, I think it's now at about 6.7, 4.40. We were at 6.48 before the policy announcement, and maybe 6.46 when the day of the policy announcement started. From there, we are nearly up about 28 basis points on the 10-year yield. And these flashes might only add to the worry, but equity markets are doing something quite different, really. Don't know if this will last tomorrow or not. Kshitij, what would your call be on tomorrow's session for Nifty or the Nifty Bank?
See, we have a weekly expiry tomorrow, and the kind of buying momentum we have seen in last 45 minutes of our trade, and somehow Nifty has also managed to close above 11,900 levels in today's session. So I believe kind of follow buying can be seen in tomorrow's session as well. But yes, on a higher side, I believe as far we are holding below 12,000 levels, as a call writers are very much active at those strike. I don't think so. A big rally can be seen into the index, but some kind of consolidation within a range of say 11,880 on a downside and on a higher side 11,980. The 100-point stage I'm looking at, and you cannot rule out the stock specific movement in tomorrow's session.
All right, let's see how the session pans out tomorrow after a positive closing coming about today. On that note, would like to thank both Kshitij as well as Manav for joining us and taking us through your views on markets as well as individual stocks. And with that, it's a wrap on this edition of Countdown. It's goodbye from the entire team. Thanks for watching. Stay tuned to BloombergQuint. Markets Wrap comes up next.